that so much of tech seems to be getting its groove back, we need to address the really kind of stunning decline in Sierra Wireless after it reported. Here's a company that's a pure play on the Internet of Things. You know we love that. Makes components, especially wireless modules, allow all sorts of devices to connect to the web, the hottest area. Now, Sierra Wireless had been on fire right up until last Thursday, when the stock lost more than 20% of its value in a single session. The reason? Okay, well, Sierra Wireless reported a strong quarter the day before. 2-cent earnings beat off a 28-cent basis, higher than expected revenue, up 11.1% year over year. Management's guidance for next quarter was considered disappointing. On top of that, the same day, we learned that Sierra is buying Numerex. That's another machine-to-machine communications play, and a stock-for-stock deal that's valued at roughly $107 million. And this deal was not well received by some analysts, fretting that perhaps there's too much dilution, some integration risk. Still, this formerly red-hot stock has come down dramatically. I mean, couldn't this be the bargain we've been looking for? Let's check in with Jason Cohenauer. He's the president and CEO of Sierra Wireless. Learn more about how his company's doing, where it's headed. Mr. Cohenauer, welcome to Mad Money.
Thanks, Jim.
Good to
be
see you.
here.
Have a seat.
Thanks.
All right, so I went over the call. I like to read them in the vacuum before I read any analyst comments. It was a very, very strong quarter, and you had a lot of good wins and potential for even more wins. So why don't you just tell people what are the markets you're excited about, what you do, and how, and a big contract you just won might be the biggest in the whole in that one particular area.
It is. It is. So a little bit about the business.
Sure.
We help OEMs, equipment manufacturers, and enterprises connect their machines to the Internet. First, connect them to cellular networks, and then ultimately to the Internet and back-end systems. And we're the world leader in that space. We do that through a series of equipment, so embedded devices that go inside machines like cars and smart meters, connectivity services to connect those things to cellular networks, and back-end cloud services that give customers all the tools they need to manage those devices and to get that information back to their back-end system.
Okay, so Volkswagen selects you for 2 global design wins. If we had a Volkswagen, where would we see you, and what would you be doing?
If you had a Volkswagen, starting in 2018, you would take advantage of the Volkswagen concierge services that you access through your head unit. And we're providing the connection behind those services so that you, the driver, get connected to the suite of Volkswagen services.
And it's obviously, if you got that, there's a possibility for more deals like that.
Well, we already have quite a few automotive deals. It's a key secular growth opportunity for the company. The connected car is, we think, going to be very big. It's a market that's only 13% penetrated today. We think it's going to 100% penetrated.
Energy, very important for you guys.
Yes.
Describe where you fit in the food chain.
So it's primarily at the smart meter and in the smart grid. So think about meter manufacturers who make electricity meters that go on the side of your home.
Right.
So no longer does the meter reader have to come out with his clipboard to read your meter, right? We provide that connection to the electricity meter.
They still do for me.
It's amazing, isn't it?
Yeah, they still do. We talked about it with my wife. So why is it right there? Why? She goes, well, because for the meter reader.
Yeah. This is going to change for sure.
Good.
And then further into the grid, there's lots of work to do in the grid in terms of modernizing the grid and pushing decision-making out into the grid to make it more efficient. Okay,
so now this acquisition you made. Here's an outfit, Paradigm Capital. Read these research notes. Large transaction, dilutive to earnings. No EBITDA, not a lot of growth. Why buy Numerex?
So we've got a stated strategic intent to scale our revenue from recurring IoT services.
Right.
So we're big in devices. We've got a small fledgling position in providing connectivity services and cloud services. It's 4% of revenue today. We want to scale that to 10+% of revenue.
Okay.
And we've been very clear on that desire. Numerex helps us to get there. So we literally triple our revenue from recurring services with Numerex. And we're able to attach more services to the devices we sell.
And they didn't seem to have all that much organic growth to me. Is that a concern?
Well, I'd say Numerex has been going through a transition.
Right. It's a big challenge for them.
There's a challenge, and we're realistic about it. I think that's reflected in the price we paid. I think we bought well. And I think that the worst of the transition is behind them. That's our call.
Okay.
And I think that once we have that asset inside, we can focus on growing the platform.
So these integration risks, you've obviously sussed them out ahead of time. It isn't like you're just going in blind.
Of course.
It's strange. When you see the downgrades, you get nervous, right? I mean, because remember, I'm trying to figure out, that was a very steep decline. So I immediately feel something's wrong with the core business, but I can't find it.
There's nothing wrong with the core business. And furthermore, if you read a few more analyst notes, I think
I read them all.
I think we got a lot of kudos.
Oh, no, you did. It's just that
for the strategic
when you
fit
get
of
a
the
downgrade, it does strike you. I always try to look at these things. There's a sense that you, some people are saying, well, how many customers do they have? You actually have thousands of customers, right?
Thousands of customers. We ship millions of devices every year. By the way, every one of them needs to be connected to a cellular network and a back-end cloud solution.
Okay.
Why not us?
And you've shipped 130 million plus IoT devices worldwide.
Correct.
So why did you describe the market, as I understand, as only a $3 billion market? That would seem to be far more than that.
Well, you know, in 2015, that's the way we would size the market, and that is principally embedded cellular modules for the Internet of Things.
Okay.
Now, two things are happening. The market's growing, and we're expanding our position in the value chain. So we're exposing ourselves to a much bigger part of the value chain and a much bigger opportunity. We now size our market opportunity at about $30 billion.
Okay, good. All right. Last question. We are very close to Honeywell, and they have devices where you can change the thermostat remotely.
Yes.
Is that you?
We work with Honeywell Security. A lot. Yes.
Okay.
So those alarm panels that go in your home are connected over cellular using Sierra Wireless.
Okay. Very good. Because I've got the whole suite, so I know that.
Good.
All right. That's Jason Cohen, the president and CEO of Sierra Wireless, SWR. I don't really get the decline, and after listening to Jason, I still don't get the decline. Seems like it could be a good situation. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.